Assalamu alaikum. Welcome to lecture 1 of financial reporting. So in my earlier video, I have discussed the entire syllabus of financial reporting, how it will be tested, what are the resources you need to access, and the details of all the lectures that I'm going to cover. So this is the first lecture, and in this lecture, we are going to talk about all the rules and regulations that govern the reporting of the financial statements, how we report, how we present, everything will be present in this lecture. So the introduction to IFRS. That is also section A of your syllabus. That is the regulatory environment of the accounting system. So in this lecture, we are going to go through the accounting principles, what is GAAP, the sources of GAAP, role of statute and standards, IFRS accounting standard versus local GAAP, then IFRS foundation, the standard setting bodies, who are the ones who set the standards, their objectives. Then we are going to go through IASB, the standard setting, the projects and their work plan. Then we are going to go through the IFRS accounting standard. How do we apply IFRS standard? Then the general purpose financial statement, uses of IFRS standard, benefits of IFRS standard. Then we are going to go through International Sustainability Standard Board, ISSB. So what are the sustainability disclosure standard? Remember, your accounting standard and your sustainability standard are different. Okay, they fall under different boards. Then responsibilities of ISSB, then their aims, and IFRS S1. This is new, that is added to your syllabus. It was earlier, it was not there. Okay, that is IFRS sustainability 1. There are two, IFRS S1 and IFRS S2. S2 will be tested for SBR. It is not tested for you in your financial reporting level. Okay, so we are going to go in the standard, the objective, the scope, conceptual foundation, the core content of the standard, the general requirements of the standard, and finally we are going to conclude with the syllabus. How much syllabus we have covered from this lecture. Then we are going to summarize the entire lecture at the end. And are there any technical articles that you have to read for this lecture? So let's start. So this is just an overview of what I'm going to cover in this entire lecture. So the accounting principles are divided into your IFRS foundation. IFRS foundation is divided into two boards. One is accounting board, that is IASB. The other one is standard board, sustainability, that is ISSB. Okay, IASB, ISSB. The two are standard setting board. Okay, and then under accounting standard, we are going to go through how we apply, then the general purpose, then the use and the benefits. And under sustainability, we are going to go through IFRS S1. Okay, so let's start. What is GAAP? GAAP is a term that is used for a set of financial accounting standard and the reporting guidelines used to prepare accounts in a given environment. For example, we have UK GAAP, we have US GAAP, there are many more. Okay, but mostly these are very well known. Okay, each country will have their own accounting standard which will govern how they are going to prepare their set of financial statement. But the very common, because since we are going by the UK, okay, we mostly follow the UK GAAP. Next, so the term GAAP, that is generally accepted accounting principles, they may or may not have any legal authority in a given country. What are the sources of GAAP? Accounting standards on their own, they are not a complete regulatory framework. Okay, someone else is setting this accounting standards. Someone else is that regulatory framework. They themselves are not regulatory framework. Okay, so the regulatory framework. What is the primary source of GAAP? From where are this GAAP coming? Who is setting all these rules of GAAP and all? Okay, so that primary source is the regulatory framework who is setting this GAAP. So it includes the body of rules and regulations from whatever source that an entity must follow when they are preparing their set of financial accounts in a particular country. For example, we have statute known as Companies Act. Okay, then we have accounting standards. Now, Statements that are issued by professional accounting bodies will lay down the rules on accounting for different issues. For example, IFRS S1. Okay. Then we have financial reporting standard, that is UKFRS. In UK we follow financial reporting standards, but when you internationally you follow IFRS. Then we have financial accounting standard known as USFAS. See, all these details you don't have to know, they will not be asked in your strategic business reporting. The older thing is, because in your section A, mostly in your section A question, okay, because it is objective test questions, there they might ask some of this knowledge area questions. For example, what is the board which issued this, under which board this comes, things like that. That's why we are going through all this. Otherwise, the details and how it is operated, in which year it started, all these things are not needed. Okay, they will not ask in your exam also. So other sources of GAAP, best practice. You can take the information from the best practice that is used. Okay, if you don't have any rules in a specific area, we look at the best practice. Then industry groups such as Oil Industry Accounting Committee, they have OIAS, AC, then we have British Bankers Association. Now, the role of statute and standard. The structure of US GAAP is very rule based, but IFRS is very principle based. Okay, so some countries have a very legalistic approach to drafting financial statements. They follow the legal rules. Okay, and the legal rules are very detailed and they are very specific, and the system is more geared to producing a profit figure for taxation purpose. Other countries, they will combine a statutory regulatory framework with standards that prescribe the details. For example, in UK, we have Statute, Companies Act 2006. Then standard is the financial reporting standard. This is in UK. They are more principle based. Okay. Now, some countries have a very little way in the statute or rely largely on standards. Okay. In US, for example, the Securities and Exchange Commission, that is SEC, they oversee the accounting regulations that are issued by the profession. Okay. Currently in the US, IFRS accounting standards are permitted for listing by foreign companies. However, domestic public companies must use US GAAP. You see, if you are working in US, you mostly have to follow the US GAAP. Okay, especially the public companies. But currently, for the foreign companies, they are allowing the IFRS accounting standard. Earlier, they did not allow it. Now they are allowing it. Now, so IFRS accounting standard versus local GAAP. Many countries have adopted IFRS accounting standard as their accounting framework. And slowly you are seeing that local GAAP is disappearing, or it is only used by very few unlisted companies maybe. And what about countries which do not have any GAAP, their own GAAP? So other countries with no local GAAP, they have adopted IFRS accounting standard as their local GAAP. Okay, so the adoption of IFRS has some disadvantages also and advantages also. First, let us go through the advantages. Advantage number one international model for all. So preparation is easier. Next, it improves the quality and credibility also when you want to access the global fund, because same IFRS set of standard could be read by anyone from any country. Third, it reduces training costs. You don't have to train your staff from one country to another country's GAAP. It is all the same. So accountants should only learn one model. Next, recognized globally. Disadvantages on the other hand, there's a cost to convert from your local GAAP to IFRS. Sometimes you have to convert. You can't just go by the IFRS. Next, not everyone might want to change. They might be reluctant to change. Third, there may be a requirement for both statutory and IFRS financial statement. And perception of difficulty. It is often seen as a difficult. Okay. especially if there are some new standards which were not there in your local GAAP and now you have to study because it is there under IFRS. So you have to learn those, and it could be difficult and it takes time. Now, next. So the second part is your IFRS foundation, the standard setting bodies. IFRS foundation is the one which, this is a standard setting body. It sets the standard and it works for two field. One, the accounting standard. The other one is for the sustainability disclosure standards. First, we'll go through the accounting standard, then we'll go through the sustainability standards. So, IFRS Foundation. IFRS Foundation is a not-for-profit public interest organization. It is established to develop high quality, understandable, enforceable, and globally accepted accounting and sustainability disclosure standards. Please understand the role of IFRS Foundation. This could be asked in your exam, in your section A questions. Okay, in your objective test questions. Okay, what are the role of IFRS Foundation? So one of the role is to set accounting standards and sustainability disclosure standards. Next, it has two standard setting bodies. One IASB, the other one is ISSB. Okay, objectives of IFRS Foundation. So through IASB and ISSB, they develop public in the public interest, high quality, understandable, enforceable, globally accepted principles known as IFRS standards for general purpose financial reporting based on some principles. Okay, then to promote the use and application of IFRS standard. Then to fulfill the above, in fulfilling the above objectives. Okay, remember, to fulfill the above objectives, you have to also it takes account of the date of the sizes and the types of the entity in the diverse economic settings. And to promote and facilitate the adoption of IFRS standards through the convergence of national and regional standard and IFRS standard. Next, so now we are going to go through the accounting board, that is IASB. So IASB is responsible for developing the accounting standard known as IFRS accounting standard. Now do you know how IFRS accounting standard came into the picture? Main board is what? IFRS Foundation. From IFRS Foundation came IASB, and IASB will set the accounting standard. If you can picturize the hierarchy, then you will understand. Now, IASB is supported by a network of national accounting standard setting bodies and regional bodies. So they support IASB in setting accounting standard. It is formally, before it was known as National Standard Setters. The International Forum of Accounting Standard Setters is a group of national accounting standard setters from around the world, plus other organizations who are closely involved in financial reporting issues. They sit together and they make the standards. Okay. So where all the people from all over the world comes, sit together and set the standard. Next. So in addition to performing the functions, the IFRS and the regional bodies can undertake research, provide guidance on IASB's priorities, facilitate and cooperate on outreach, encourage the stakeholder input from their jurisdictions into the IASB's due process, and identify the emerging issues. See, before you set any accounting standard, you always have to undertake research in the market. You want to know what is there in the market that is coming up, that we have to measure, or currently for which we do not have standard, for which we have to develop standard. Then you take the guidance of IASBs. Then you sit together and cooperate among each other. Then you encourage the other stakeholders to participate. And finally, you identify any emerging issues. So this is the way it is done. What is the due process? IFRS accounting standards, they are developed through a due process. They are not set in one day. Okay. There is a long process that goes behind setting all these accounting standards that you have right in front of you. They are your IFRS 15 or IFRS 16, the leases, all these things went through this process. Some become successful and become accounting standard, but some they fail and then they go back again and start the cycle. Okay. So IFRS accounting standards are developed through a due process, which is a set of consultative procedure that is established by the board and the trustees of the IFRS Foundation to ensure that the standard setting is transparent and considers a wide range of view from interested parties. See, when a standard is set, everyone's opinion is taken into the picture, okay? And the standard setting is very transparent. It is not opaque, it is not hidden from people. Everyone there is known the process, how it is set and everything. So accountants, mostly interested parties will be number one is accountant because they are the one who has to prepare the set of financial statements, or also the financial analyst and the other users of financial statements. They are one interested party. Second, your business community. Securities regulator and legal authority. Of course, because they are the one who is going to set the legal rules, so they have to know about it. Next, academics and other interested individuals and organizations throughout the world. The due process. So the board uses the due process to gain a better understanding of different accounting alternatives and the potential effect on the proposal on affected parties. So a comprehensive and effective due process is essential to develop this high quality standard. Otherwise, you can't develop high quality standard if you're not taking into picture what is the impact on the user, on the preparer, on the other stakeholders. So it's a very comprehensive process that is taking place, which serves the investor and other users of financial information. So the due process steps includes the following. Those in bold are required under the terms of IFRS Foundation Constitution. So now we are going to go through that due process. This is that due process that I've been talking about, and they follow in this order only. Okay. So the first, as you can see here, you identify and you review any associated issues and consideration of the application of conceptual framework to the issues. Immediately we don't go and set the IFRS standard. Okay. First we see by using our conceptual framework. Once we have identified and reviewed an issue, we see how can we apply conceptual framework to the issue. Second, we study the national accounting requirements and the practice and the exchange of views with the national standard setter. Whoever is setting the standard nationally, we sit with them and see how they are setting it. We study their requirements. Third, we consult the IFRS Advisory Council about adding the topic to the IASB's work plan. Then they will see whether this topic needs to be added to the IASB's work plan or not, for which they consult with IFRS Advisory Council. Then they form an advisory or working group to advise the IASB. Then they publish a paper, okay, or a discussion document, you can say, for public comment. Remember, they make a paper and they will leave it for the public comment. They will see how public is reacting to it. The next stage, they publish an exposure draft for public comment. You see there is 1 to it. We'll see later what this note 1 means and 2 here. So we'll see what this 1 and 2 means. Then once the draft is sent for the public comment, we consider all the comment letters that are received within the comment period. There is a certain period that is set by them. Within that period, they will see what are the comments they are receiving. And after that, if they consider that it is desirable, holding a public hearing and conducting field test. They will conduct field test, they will hold a public hearing, and finally, the final stage, they will approve the standard by at least 9 or 14 members of the IASB. So if the 9 out of 14 agrees to the standard, that a standard needs to be made on this topic, standard will be made into IFRS standard. At least 9 out of 40 members of the IASB. So this is the whole process. Now, so the notes 1, that exposure draft. Okay, so that note 1 is, this is a basis for the conclusion. Okay, a basis for conclusion is usually included in an ED. ED means exposure draft and the published standard. And second note, any alternative views of IASB board members must be included in that exposure draft and also the published standard. So the basis of the IASB's conclusion, which summarizes the board's consideration, is also published for comment. Remember, whatever is the IASB's conclusion, we'll also go for the comment, public comment. Okay. Next, discussion papers. So IASB, they may develop and publish discussion papers, usually called DP, okay, for public comment. Even discussion papers they will send for public comment. So this will set out the problem, the scope of the project, and the financial reporting issues. Discusses the research findings and relevant literature, and alternative solutions are presented to the issues under consideration and arguments and implications relative to each. Following the receipt and the view of the comments, IASB developers will publish an exposure draft, which is also for public comment. First is the discussion paper that will go for the comment. Then it will be set in the published in an exposure draft that also will go for the public comment. Now, exposure draft. So exposure draft will invite the comment on any aspect of specific questions and the proposed IFRS accounting standard. It sets out the proposed standard and transitional provisions if any. It is not the main standard yet. It is in the process like a draft standard. Okay. Now, voting. You have to vote. So, 9 out of 14 members. It could be 8 if 13 of your members are sitting. Okay. So that's how a standard is published. Whether it's a publication of standard, an exposure draft, or a final IFRS interpretation, all these three will require approval by a supermajority. In all these three, you need voting. Whether it is a publication of standard, exposure draft, or IFRS interpretation. That is 9 out of 14 or 8 out of 13 of fewer than 13. All other decisions, whether issue of a discussion paper, will require a simple majority of the IASB members present at a meeting. That means you just have to be present in that meeting. That means at least 60% of the members should attend that meeting. Then the comment period. So the comment period is the minimum comment period for the exposure draft is 60 days. Okay. So reasonably the comment period for any other reason, okay, is between 90 to 120 days. But for an exposure draft, minimum is 60 days. That's why it's highlighted in bold. But for other reasons, like for the translation of documents and other things, comment period is 9 or 120 days, 90 or 120 days. Okay. Work plan. Now we are moving on to the projects and the work plan of IASB. So the work plan. The IASB's current work plan includes this. Number 1, they will set the standard. They have a standard setting project, that is to develop new IFRS accounting standard, or they will amend the existing standard. Then they have maintenance project that is going on. This maintenance project will narrow the scope amendments to existing IFRS accounting standards, and they have research projects which consider problems with existing IFRS accounting standards and provide solutions to this. So what are the three standards? They will set either new accounting standard or amend the existing standard. Next, they have maintenance project to narrow the scope amendments to the existing IFRS. And third, research project to see whether there are any problems within the existing IFRS accounting standards and give solutions to this. So the standard setting and the maintenance project, they are currently underway and they are at varying stages, with an exposure draft have been issued in some cases, but not in others. Now, so the projects is over. Now we are in the work plan. Okay. ISBs often makes minor but not very urgent amendments to the standard through its annual improvement cycle. So this proposed amendments to the several standards are included in a single exposure draft. The changes are of two types. First type, either those resulting in accounting changes and those on which terminology or editorial changes. Now, exam advice. The annual improvements exposure draft will not be asked in your financial reporting exam. Okay. Now, public information. So the due process requirements are built on the principles of transparency. Why do we do that due process? Because the principle is to be as transparent as possible. So we want to set the standard setting process in a transparent manner. Next, it should be full and it should be a fair consultation. That means it is considering the perspectives of all those who are affected by IFRS standard and accountability. So the IASB analyzes and the effect of its proposal and explains the rationale for its decisions in developing or changing the standard. IASB takes that accountability. They want to be accountable. Why they have to change a certain standard or why they want to develop a new standard. The reasons for it. Now, therefore, IASB aims to make their deliberation, their activities, their intentions as transparent and open as possible. So, that's why you will see extensive information on the IASB and their activities are available on their website. You can go to IASB's website and see all the information. What are those information? It will include their discussion paper, their exposure draft, their public comments, their current activities, their their timetables of IASB and IFRS IC meetings. All this you will see in their website. IASB and IFRS IC meetings, they are open to public and they may be received as a webcast through the IASB website. IASB update and IFRS IC update, they are issued after every IASB and IFRS IC meeting, that is detailing issues that are discussed and the conclusion that are reached. After every meeting, what are the things that have been discussed and what are the conclusions that have reached will be updated on their website. Now, IFRS, our main topic. So the application of IFRS. In fact, your financial reporting and SBR is all about applying IFRS accounting standard only. So IFRS accounting standard is a major international GAAP. It is widely used and accepted as a basis in preparing your financial statements in many jurisdictions. In the descending order of authoritativeness. Descending order of authoritativeness. First, IFRS accounting standard. They have the authority, including any appendices that form part of the standard. Next, interpretations. We'll see what the interpretation means. They have the authority. And appendices to IFRS accounting standard that do not form part of the standard. And implementation guidance that are issued by IASB. Remember, descending order means the one who has the highest authority is listed first versus the one who has the less authority. So we are going from highest to the lowest. That is the meaning of descending order. If you are not understanding the meaning of descending order. So the most authority is done by the IFRS accounting standard. And then we are going downwards. They are having lesser and lesser authority. Then interpretation, then appendices, then implementation. Now, so IFRS accounting standards includes all international accounting standards known as IAS standards that are issued by the both predecessor. See, before IFRS, if you see my previous lecture, not a lecture, my previous video where the orientation of financial reporting, you must have seen that table. Some standards are IAS, some standards are IFRS. IAS are the old version. Okay, they are the old standards issued by the board's predecessor. The old board has issued them. They are still in use, currently in use. That's why the name is kept as IAS. IFRS, they are the new ones, new standards. So that's why they are taking the name of IFRS. In fact, all the standard that are going to upcome in the future will use the term IFRS. No longer they will use IAS. Okay. So that's why you see there are two, IAS and IFRS. And you might be thinking, are they different? No, they are not different. In fact, they all are standards only. So now, authority interpretations of the standard, which provide further guidance on how to apply them, will be developed by the IFRS Interpretation Committee. They are the one who will say how to interpret. Hence, the name Interpretation Committee, also known as IFRIC. Now, the general purpose financial statement. So, general purpose financial statement means those intended to meet the needs of the users who are not in a position to require an entity to prepare reports according to their own needs. That means they are not customized. They are general information and they are used for general public. And it's the same financial statements for everyone, all the stakeholders. It is not a separate statement for banks, separate statements for shareholders, separate for employees, separate for manager. They can't do that. Customized information is not required. Hence, the term general purpose financial statements. IFRS accounting standards apply. So this IFRS applies to what? To the published financial statements on all the profit-oriented entities. Profit-oriented entities means those that engage in commercial, industrial, and financial activities. They may cooperate or organize in other forms also, for example, partnership. IFRS accounting standards apply to non-for-profit activities also, government, business enterprises, and other public sector entities also. They may also be appropriate for them. So IFRS accounting standards apply to all general purpose financial statements. This is the conclusion. That means, in short, financial statements, both for separate entity and consolidated financial statements. Any limitation on the applicability of a specific IFRS standard is made clear in the scope section of the standard. A standard may give a choice of accounting policies. For example, IS 16 allows you choice between cost or revaluation model. That is for subsequent measurement, but initially it will be measured at cost. Then IFRS 3 allows non-controlling interest to be measured in two ways. An IFRS accounting standard applies from a date specified in the standard, and it is not applied retrospectively unless otherwise indicated. Retrospectively means you do not go backwards and change. You change from the date it is specified, from that day onwards you apply the IFRS accounting standard. You do not go back and change anything that has been recorded. Now, the uses of accounting standards. Number one, it is as a national requirement or as the basis for national requirements. As an international benchmark for countries developing their own requirements. When they are developing their own requirements, they can often use how IFRS standard has been developed. So they can use it as a benchmark to develop their own. Next, by regulatory authorities and companies. They often use this to regulate the company. Next, it is used by large multinationals to raise finance on international capital market. What are the benefits? Benefit is it brings transparency. Okay. By enhancing international comparability. See, when everyone is preparing IFRS accounting standard, it is very easy to compare. Comparison becomes easy. Quality of financial information improves. It enables the investors and market participants to make informed decisions. Next, accountability. It strengthens accountability by reducing the information gap between the providers of capital and people to whom they have entrusted their money. So, they provide information needed to hold the management to account, and it is a source of global comparable information. Vital importance to regulators around the world. Next, efficiency. IFRS accounting standard contribute to economic efficiency by helping investors to identify opportunities and risks worldwide, and therefore it will improve their capital allocation. So if you are using a single trusted accounting language across the globe, it lowers your cost of capital and it reduces international reporting cost for businesses also. See, if everyone is applying the same accounting standard, you don't have to change from one standard to another standard when you're moving from different countries. Now, due to globalization, if one single standard is used, it will become very easy for the preparers of financial statement and also the users of the standard to understand, no matter which country they are located in. Okay. Next, ISSB. So with this, we have finished the accounting standard. Now we are moving on to the new standard, that is International Sustainability Disclosure Standard. Here we have to disclose. It is not about measurement or recognition like accounting standard. This is about disclosure standard. Okay. So IFRS Sustainability Disclosure Standard. So in November 2021, IFRS Foundation trustees, they have announced that they are going to create ISSB because they want to meet the needs of the demand of the international investors who wants reports on climate change, social governance matter. Okay. So because of this now, you can give high quality, transparent, reliable, comparable information. Comparable reporting on climate and other environmental, social governance matter. So the aim is to become the global standard setter for sustainability disclosure for the financial market. That is the ISSB's aim. Responsibilities. Okay. ISSB has a complete responsibility for all the sustainability related matters. So these are the matters. First, it wants a full discretion in developing and pursuing its technical agenda that is subject to specific consultation requirement. Then, preparation and issuing of sustainability disclosure standard and exposure draft. Following the, of course, the IFRS Foundation due process. That due process, remember that table we have gone through, that arrow, that is the same due process we apply for the sustainability standard also. The same way that we have used for accounting standard. Now, aim. ISSB aims to deliver a comprehensive global baseline of sustainability related disclosure standard. Information about your sustainability related risks and opportunities that will help to make an informed decision. It is not starting from scratch, but building on the work of existing investor focused reporting initiatives. Okay. For example, there is a climate disclosure standard board. So from there they are building. ISSB is issued in the first two standard. Okay, so first two standard they have issued in June 2023. Not very late, it's the latest. So exam advice, only IFRS standard 1, that is IFRS S1 will be tested in your financial reporting exam. But in your SBR, IFRS standard 2 also will be tested. So only we are going to cover IFRS S1 in financial reporting. Now, IFRS Sustainability Disclosure Standard 1 or IFRS S1 for short. Name it whatever, it is the same only. Okay. Sets out the general reporting requirements. Okay. While the other IFRS disclosure standards will set specific disclosure in certain areas that we are not going to cover. We are going to go by the general requirement. Okay. This means that IFRS S1 is an underpinning standard, being the sustainability equivalent of IFRS 18. IFRS 18 is a new standard which is replacing IS 1. That also we are going to cover in lecture 3. Okay. And IS 8, that is the basis of preparation of financial statement. So the conceptual foundation. Its conceptual foundation, that is the conceptual foundation of S1, IFRS S1, includes all the qualitative characteristics that you have identified in conceptual framework. We'll see later in this lecture. What are those characteristics? Now, objective of this. Main objective I've highlighted in bold is to disclose information about sustainability risks and opportunity useful to primary user for decision making. Such information is useful to primary user in enabling to generate cash. Okay. Why? See, for an entity to generate cash, it depends on various things, interactions with the entity and its stakeholders, society, economy, natural environment throughout the entity's value chain. You can't ignore the society, you can't ignore the environment, you can't ignore the stakeholder and just think about cash generation because they are all related. For example, one example is COVID. What happened in COVID? Many industries suffered, like tourism industry, hotel industry, hospitality industry. They suffered a lot. Why? Because they did not care of the that model got affected because your natural environment got affected. People couldn't travel. You see? So in that situation, it's very hard for you to generate cash. And when you're talking about an entity's value chain, it includes your natural resource, stakeholders, everything. So that's why you need information about sustainability. It's important. Earlier, it was not mandatory. Earlier, disclosing sustainability issue was voluntary. If you want to disclose, you are considered a good corporate citizen. If you do not, there is no harm. There is no penalty that you have to pay. Now, they have made it mandatory by issuing IFRS S1. So this standard will set out all the general requirement for the content of the standard, how you have to present, okay, the presentation of this disclosure, so that information is what useful to the primary user. Definition. What is the definition of value chain? All the range of your interactions, resources, relationships that is related to the reporting entity's business model and the external environment in which it operates. You are not working in isolate. Whenever a business model we are talking about, you have to see the interaction with the external environment. Next is business model. It is the system of transferring input into output by the activities that you're performing. Okay. So the aim is you want to create value for the entity in the short, medium or long term. Scope. IFRS S1 applies to the preparation and the reporting of sustainability related financial disclosure in accordance with IFRS Sustainability Disclosure Standard. That is now. So now you have to apply, irrespective of whether the related financial statements are prepared in accordance with IFRS standard or other GAAP. It doesn't matter what standard you are using to prepare your financial statements. You still have to apply the IFRS S1. Number two, even if you, okay, see, sustainability related risks and opportunities that you reasonably cannot expect to affect an entity's prospects are outside the scope of the standard. If you see that you reasonably cannot expect the sustainability risk and opportunities to affect the entity, do not report them. They are outside the scope of IFRS S1. You can't record them. You can't disclose them. So IFRS S1 uses terminology that is suitable for profit-oriented entities. What about non-profit or not-for-profit entities? They have to amend the descriptions for the particular items of information under S1. Now, the qualitative characteristics. If you see, there is a link between the conceptual framework. By the way, conceptual framework is my lecture number 2. Okay? Conceptual framework and IS1, the qualitative characteristics. Okay? So, the sustainability related financial disclosures are part of what? General purpose financial reports. So, the qualitative characteristics in the conceptual framework will apply here also. These are the characteristics. Under fundamental, there are two. Fundamental means it has to be there. Enhancing, if it's there, it's good. It enhances the usefulness of the information. Fundamental, it has to be there. Number one, information has to be relevant and it has to faithfully represent. Enhancing, information has to be comparable. You have to verify the information. It has to be presented in a timely manner and it has to be understood by the user. Okay. Now, materiality. Do not forget materiality. An entity should disclose material information about the sustainability risks and opportunities that can affect the entity. Now, connected information. Conceptual foundation of the information, sustainability information includes connected information. So, information must be provided in a manner that enable users to understand connections between these things. You have to understand the connection between risks and opportunities. Disclosures provided. Within the sustainability related financial disclosure connections within the core content and across the sustainability related financial disclosures and other general purpose reports such as related financial statements. See, when you're giving a sustainability information, it should have a link with the financial statements also. That link you should be able to disclose how it is connected to which item they are affecting. See, in your exam, you will not be told to draw up an statement. Okay, IFRS S1 or sustainability report, you will not be told that. But at least the content, the core content of that report, you have to know. So these are the 4 core contents: governance, strategy, risk management, matrix, and target. Let us start with the governance first. Okay, and these diagrams you don't have to memorize. You will not be told to draw up diagrams. Okay, governance. What are the process, controls, procedures to monitor, manage, and oversee the sustainability issues? Next is strategy. How are you going to manage your sustainability issues? Next is risk management. How are you going to identify, assess, and manage the risks? And next, metrics and targets. To measure anything, you need some target. You need metrics to measure sustainability issues. See, financial information are easy because we have profit, we have operating profit, we have gross profit, we have expenses, we have ratios. There are metrics and targets to measure how well we are doing. But for sustainability issues, we have to develop. There are not certain metrics and targets for them. For example, performance, progress towards your target that could be required to be met by law. Okay. So this four things has to be there. Then we are going to go through the four of them in detail. First is governance. We talked about governance. Okay. So disclosure information about the following will enable users to understand governance, control, and procedure to manage, monitor, and oversee risks. Governance body responsible for oversight. Who is responsible for that oversight? Who will see that everything is working or not? There should be a body for it. Next, what is the management's role in the control, in the procedure, in the governance process? Next is strategy. What are the risks and the opportunities that can affect the entity? The effects on business and value chain, strategic decision making, financial position, financial performance, and cash flow, resilience of the strategy and the business model to the sustainability related risks. Whether the strategy is resilient for the sustainability related risk or do you have to change, and also the business model. So these are the examples of specific disclosure requirement include the following. Okay. So here you say risks and opportunities we have, business value chain, strategy and decision making, and financial position, performance, and cash flow. These are the specific disclosure we have to disclose. First, we have to describe the risks and opportunity. Then we have to discuss the time horizon over which effect might occur, whether it's long, medium, short term. Okay. Then business model and value chain. You have to describe the effect on your business model and value chain. Whether the risks and opportunities are concentrated, for example, whether the risks are in a certain geographical area or types of assets. Okay. Next, strategy. How the entity will plan to respond to the risks or opportunities. What is the progress against the previously disclosed plan? What is the trade-off between the risks and opportunity? For example, if you think about environment, what is the impact on the employment? So environment impact versus employment impact. Okay. Next, financial position, performance, and cash flow. How affected by risks and opportunities? How the sustainable risk and opportunity could affect them? What are the significant risk of material adjustments to the carrying amounts in the next year? And also the expected changes over the short, medium, and long term. Risk management. So if you disclose information about this, it will enable the user to understand the entity's risk management process. So what are their processes and related policies to identify, assess, prioritize, and monitor the risk? Sustainability related risk, sustainability related opportunity, the extent to which how they are integrated and inform the overall risk management process. It is not enough to identify the risk, you have to manage it also. Metrics. So you have to disclose metrics that are required by IFRS Sustainability Disclosure Standard. Next, metrics used to measure and monitor the risk performance, including progress towards any target that is set by the law. You should also disclose the target that it has set or that it is required to meet by law and progress towards those targets. Now, general requirement. So general requirement for the content and the presentation of disclosure to be useful to the primary users includes the following. Sources of guidance. IFRS Sustainability Disclosure Standard. Disclosure topics in the ACCA and Climate Disclosure Standard Board framework. Okay. Location of the disclosure as a part of the general purpose financial reports. See, to make the information useful to the user, number one, what is the source of the guidance? From where are you taking the guidance? Next, what is the location of that disclosure? Then the timing of reporting. It has to be at the same time that you are reporting of financial statements, and it should cover the same reporting period of the financial statement. Next, fourth, disclosure of comparative information. When you are giving sustainability information, you should give something to compare also, and it should be disclosed in the same reporting period. Okay, that means for all the amounts that you have disclosed in the reporting period, you have to give the comparative information. Then, for narrative and descriptive information, if useful for an understanding of the sustainability related financial disclosure, then you give. Otherwise, you can ignore. But amount you have to give. Anything disclosed in the reporting period, you have to give all the amounts you have to disclose. But for narrative and descriptive information, only if you feel is useful for understanding of sustainability related disclosure, then you can give. Then, statement of compliance. An explicit and unreserved statement of compliance that you have complied with all the regulations. So, that's it. We have finished the entire lecture. And from our syllabus, we have covered section A. As I told you in my previous video, there your syllabus is divided into 4 sections, A, B, C, D. A is about the conceptual and the regulatory framework. So in this lecture, we have covered section A, part 3, that is regulatory framework. We have explained why a regulatory framework is needed, advantages, disadvantages of IFRS standard over a national framework. Next, we have also explained why IFRS accounting standard on their own is not a complete set of regulatory framework. Then we have described the standard setting process of IASB, revisions to and the interpretations of IFRS accounting standard. We explained the relationship of national standard setters to the IASB in setting standard. Then we have explained the role and the purpose of sustainability board. Then from section B, which focus on certain elements of the financial statement. Okay, so we have reported financial and non-financial performance. We have covered IFRS S1. Okay, their objective, their scope, their co-content, and the general requirements. And finally, let us summarize the entire lecture. So the IFRS Foundation has 2 standard setting boards, IASB and ISSB. IASB is responsible for setting accounting standards. IFRS accounting standards are principle-based accounting standards. They are widely used for preparing our financial statements. IFRS accounting standards apply to all the published financial statements for profit-oriented entities. Then, many countries have adopted IFRS as their accounting framework, with their local GAAP slowly disappearing. Publication of a standard exposure draft of final IFRIC requires approval by 9 out of 14 IASB's members. Then, IFRS accounting standards apply to all general purpose financial statements. General purpose financial statements are those that you cannot customize to meet the needs of a certain user. ISSB are setting sustainability disclosure standards. Then IFRS S1, they are the general requirements for disclosure of sustainability related financial information, where you are supposed to disclose the risks and the opportunities related to sustainability that are useful for primary user. The co-content that are required by IFRS S1 are 4: governance, strategy, risk management, metrics, and target. Remember this 4. And there are no technical articles on this lecture that is published on your ACCA website, that is on your regulatory framework. Thank you for watching, and I shall see you in the next lecture, lecture 2. Lecture 2 will be on conceptual framework. Meanwhile, do not forget to subscribe to my channel if you are watching my video for the first time, so that you get the notification of my latest video updates. You can watch all my FR lecture under my FR playlist, and to access this slide you need to contact me. You can contact me on various social media, Insta, WhatsApp, email me, so that you can access the slides. Thank you.